What if you could buy unlimited rental properties without ever showing a bank your tax returns, your pay stubs, or your personal income? The ultimate secret that professional investors use to scale massive portfolios rapidly is a specialized financial product known as a DSCR loan. DSCR stands for Debt Service Coverage Ratio, which means the lender strictly evaluates the monthly rental income of the property itself, rather than your personal W-2 job. If the rent generated by the house is mathematically higher than the total monthly mortgage payment, the property practically qualifies for the loan entirely on its own. This completely removes your personal debt-to-income ratio from the equation, allowing you to safely bypass standard banking limits and buy as many cash-flowing assets as you want. You will still need a decent credit score and a standard down payment, but you completely eliminate the exhausting paperwork and endless income verification of a traditional mortgage. It is hands down the absolute fastest way to transition from a part-time beginner into a full-time real estate mogul with a massive, self-sustaining empire. Let's break down the exact math formula lenders use to calculate this ratio so you can instantly know if your next deal will automatically qualify for a DSCR loan.